we're seeing very substantial inflation. It's very interesting. I mean, we're raising prices. People are raising prices to us.
But this level of inflation is unlike that we've seen in many, many years. So yes, you will see pricing increase at the shelf and at the retail level. I think it's inescapable based on the type of commodity pressure that we're seeing across really everything. It's hard to find something that's not inflationary at this moment.
So if you would replace owner equivalent rent with home prices, the inflation rate actually would have been 8% year over year. So there's reasons for really to worry about inflation. The Fed, I think, likes to talk about transitory. I think the Fed is most content when the inflation rate is higher than the bond yields all the way across the yield curve, which they've managed to accomplish. So they're trying to make people not scared about inflation by calling it transitory. But how do they know? How does anybody know whether it's transitory or not, given the unusual circumstances that we're in?
But when the facts change, you have to change, and the facts have changed dramatically since then. And yes, I can't find any period in history where monetary and fiscal policy were this out of step with the economic circumstances, not one.
That's why we should all be encouraging the Fed to move from I'm not thinking about thinking to start thinking. Start asking yourself, why is it that you can dismiss all this evidence, both from a top-down and a bottom-up, and hold on to a conviction? You should be more open-minded, have a bit more humility about the fact that we don't understand well supply bottlenecks. And economists typically lag when it comes to supply bottlenecks.
Well, I'm very conscious about the power of monetary policy and the limits of it. And monetary policy, a la the aftermath of the Great Recession, can be very powerful to stoke demand. If you've got strong demand, there are limitations to monetary policy in increasing supply. So
I don't know whether the market should welcome just unlimited liquidity into the future. I actually think a healthy economy requires them to step back. I mean, it is puzzling to me, with the strongest housing market, maybe in the post-war period, median prices up 20%, that they still have to be buying $40 billion a month of mortgage-backed securities. What is the purpose of that?
Warning after warning after warning. But is the Fed listening? All right. Here we go again. We got more inflation data for you. This week we got the CPI, also known as the CPI. It is known as the CPI due to its tendency of understating the true nature of inflation in the economy. Regardless, the CPI came out at 5.4% increase year over year, a stunning number. But the Fed says, hold your horses here. You cannot look at inflation year over year because last year we had the shutdowns, the pandemic, remember? Of course we're going to have higher readings year over year. Look at the month over month readings. And this time around we got pretty much the same reading as the prior month. And therefore, the Fed is jerking off all over the place. They're rejoicing the fact that we got 5.4% CPI inflation because it gives us the illusion that perhaps the Fed is right and inflation is transitory. Look at it, it is plateauing. But the main question is, what the hell does transitory even mean? The Fed says transitory this, transitory that, but they never gave a clear definition, a clear guideline of what transitory means. However, we finally got the answer, a clear definition of what transitory mean by the Federal Reserve Chairman himself, Mr. Jerome Powell.
The increases will happen. We're not saying they will reverse. That's not what transitory means. It means that the increases in prices will happen, so there will be inflation, but that the process of inflation will stop, so that there won't be further. When we think of inflation, we really think of inflation going up year upon year upon year upon year. That's inflation. When you have inflation for 12 months or whatever it may be, I'm just taking an example and not making an estimate, then you have a price increase, but you don't have an inflation process. And so part of that just is that if it doesn't affect longer-term inflation expectations, then it's very likely not to affect the process of inflation going forward. So what I mean by transitory is just something that doesn't leave a permanent mark on the inflation process. Again, I don't mean that producers are going to take those price increases back. That's not the idea. It's just that they won't go on indefinitely.
So here it is. Powell says, by transitory, we mean that prices are not going to go down. Prices are going to continue to climb higher, and they will not reverse. But the pace of increase in prices will slow down, and therefore, inflation was transitory. Ta-da! The problem is, for you and I, real people, the consumer in this economy, would you increase our rents by 25% when our grocery and utilities bills increase by 10 to 12%? When energy prices we pay at restaurants, airfares, hotels, consumer goods, when these prices surge higher and they never reverse back, yet the pace of the increase slows down. Does that help you and I at all? Of course not. Specifically when our wages have not kept with inflation, when our wages remain flat, when our wages remain muted. That extra cost, Mr. Powell, those price increases that will never reverse again. This is inflation to us consumers. This is inflation to us regular people. We're paying more for shelter, food, and everyday expenses. The fact that the pace of the increase in these prices will slow down at some point, who knows, doesn't give me any comfort at all that inflation is transitory. Inflation will leave a long-lasting scar in the budget of every poor and middle-class American. And while the CPI might have given the Fed something to jerk off to, the PPI, perhaps even more important than the CPI, the Producer Price Index, because it serves as a leading indicator. When producers pay more, they tend to pass the extra cost to us, the end consumers, and therefore those increases in the PPI show up later in the CPI. So what was the reading of the PPI, Mr. Powell? Here it is. Producer prices soar 7.8% annually in July, most on record, the highest increase in record. In addition, prices rose 1% month over month. So base effects my ass. Producer prices are rising month over month by the tune of 1%. All of that will be passed down to us, the end customer. But the Fed says, hey, where is inflation? Is it over here? Is it over there? We don't see any inflation. And even if we see inflation, it's going to be transitory. We got the tools. Trust us. Here is from the PPI report. U.S. wholesale prices rose sharply in July for the 6th month in a row and offered little evidence that a big wave of inflation is on the verge of cresting. The Producer Price Index jumped 1% last month, the government said Thursday. Economists polled by the Wall Street Journal had forecasted a 0.6% increase, way off. The pace of wholesale inflation over the past 12 months moved up to 7.8% from 7.3% in June. That is the highest level since the index was reconfigured in 2010. When they say reconfigured, it means the cooks readjusted the formulas, the ingredients, to muff inflation, to make it look less than it really is. Just understand that. But here it is, unlikely one of the highest readings since the early 1980s. But hey, where is inflation? Big picture, inflation has surged along with nearly full reopening of the U.S. economy. Consumers have a huge appetite for all sort of goods and services, but businesses cannot keep up with the demand because of widespread shortages of labor and materials. The wave of inflation is expected to recede once the economy returns to normal. We're already at normal, you but it is far from clear how long will it take. Oh, you think? Some economists also wonder if the rate of inflation will end up higher than the Federal Reserve's 2% target. It is already higher than the 2% target, you morons. Who writes this crap? And here it is, inflation is running at 5.4% annual pace. So those economists wondering if the rate of inflation will end up higher than the Federal Reserve 2% target, it is already at 5.4%. You lovely people. Before the pandemic, consumer inflation was increasing at less than 2% a year. And here it is, folks. The Fed was jerking off to the CPI number, but the jerking off got interrupted by the PPI number. And now questions are being asked whether this inflation is really transitory or not. Well, it's going to be transitory 100% according to the fake bullshit explanation and definition by the Federal Reserve headed by Chairman Jerome Powell. The mental gymnastics. Yeah, prices are not going to go down. Prices are going to go higher. They're not going to reverse. This is not what we mean by transitory. But the pace of increase will slow down. Okay, but I'm still being paid the same. My paycheck is still the same. Meanwhile, prices, day-to-day expenses went up higher. And you're saying they're not going to go down, meaning I have less money, I have less disposable income in my hand. The purchasing power goes down. The standard of living goes down. But the Fed says this is not our problem. The moment the increase in the pace of prices going higher goes down, we're going to celebrate, we're going to throw a big party and say, you see that? Inflation is dead, it's gone. It was transitory. Meanwhile, us consumers will be stuck with the extra cost living. U.S. inflation is stay hot in July as sellers flex pricing power. Corporate America are flexing their muscles. They're charging higher prices for goods and services as their input costs also increase in this inflation, because remember, they have to pay for raw materials, they have to pay for labor costs. All of these are going higher thanks to the reckless, drunk monetary policy. But to corporate America, it is no problem. They're just going to pass the extra cost all the way down to us. Powell says, not my problem. We told you expect prices to go higher and they're not going to reverse down. That's not inflation. That's just prices going higher. Inflation is something else. And by the way, what is enabling corporate America to flex their pricing power? The answer is us zombies. The zombie consumer, flushed with the stimmies and fake stock market gains. We don't care what the prices are. They go up, they go down. Who cares? We got the cash. We're living in this fake bubble, in this facade, dancing at the floor of DJ Powell, thinking that the music will last forever. Americans are not daunted by price increases, earnings show. Now, Powell says that inflation is transitory, but corporate America just unlocked a gold mine. They realized that if they raise prices, us zombie consumers will have our wallets wide open. Here, take my cash. 20% more, no problem. 25% more, no problem. 30%, no problem. Check out my Robinhood account, bro. All of my meme stock gains. I can afford it. No problem. Once again, ladies and gentlemen, the dumbest generation of investors and consumers ever in recorded history. They pay no attention to valuations, technicals, fundamentals. That doesn't matter. They put their blindfolds on, running Naruto style, heads first, asking questions later. Matter of fact, don't ask questions at all. And they stampede to buy the most garbage stocks ever of bankrupt companies. They call them meme stocks. When it comes to consumption, there is no bargaining at all. There is no response at all to companies raising prices. Hey, if you raise prices, we're not going to buy your product anymore. Nope, not these days. These days, when you raise prices, they actually buy more. The geniuses that they are. And here it is. We covered the housing mania before in another video, where people are stampeding and paying way over the asking price of a home. And in most cases, it is a garbage home. We're seeing bidding wars. People paying over $1 million over the asking price of a garbage home. Absolute mania, fueled and supported by the reckless policy of the Federal Reserve. If you bought a car last year, it could now be worth more than you paid for it. Ah, what a bunch of geniuses. They got bargaining upside down. Honey, I got a great deal on a car today. I paid more than the sticker price. Very used cars. High mileage models are now selling for big bucks. Even garbage cars. Clunkers. They're stampeding heads first, blindfolds on, and they're buying garbage cars with high mileage. Tell me again, when did I miss the zombie apocalypse? Because sometimes I feel that I'm the only survivor here. The only human being who went in a coma while the zombie apocalypse was going on, and now I'm up and I cannot recognize the world we're living in at all. According to the valuation experts at Edmunds.com, the average pre-owned vehicle on a dealer's lot that is racked up between 100,000 and 110,000 miles rose in value by 31% over the past year, from $12,626 in June 2020 to $16,489 last month. Wow, that is right. They actually increased in price by nearly a third. It seems everything we thought we knew about used car prices is now wrong, or we're living in the zombie apocalypse. The notions that a vehicle is virtually guaranteed to depreciate over time, losing at least half their original value after 5 years, and that models with more than 100,000 miles on the odometer are a tough sell to all. But most cash-strapped motorists no longer apply, with production of many new vehicle lines being slowed or halted by the current microchip shortage. A lack of supply has sent more U.S. consumers, even rental companies, to the used car market. In turn, the upsurge in demand, along with a short supply of product to sell, fewer new models sold means fewer trade-ins winding up on the used vehicle lots, has caused prices to skyrocket literally across the board. In fact, as we documented in a recent post, some pre-owned models are now commanding higher prices than their factory fresh counterparts. A quote-unquote gently used Kia Telluride, this is the SUV, is going on average for over $3,500 more than a new one, according to the car search website iSeeCars.com. Wow, what a bunch of geniuses. We're gonna pay more for a used vehicle than a new one. Tell me again we're not in a zombie apocalypse. And by the way, there is no relief in sight here in this mania. The great American car shortage won't be over for months. What are they talking about here? For months. You see, the global chip shortage hit every car manufacturer, but specifically Ford. Good luck finding a F-150 in the market these days. And the reason is there are no chips to manufacture these new cars. Now, don't you miss the 1990s, good old school cars that lasted forever? You buy a Honda, a Toyota, and it lasts forever and ever and ever. All you have to do is change the oil. Forget about chips and all of that garbage. We didn't need that before. But I have more bad news for you. Have you noticed the performance of chip stocks as of late? Well, they're not doing good. Besides some gamma squeezes here and there, the majority of chip stocks have been crashing for the last few weeks. And the reason is company after company after company confirming in their earnings calls that the chip shortage will last well into 2022, perhaps 2023. Chip delivery time surpasses 20 weeks in no sign shortage easing. It takes 20 weeks, more than 20 weeks, to fulfill any order. If you think this is over, think again. And perhaps another sign that you might have noticed of inflation in this economy, the invisible inflation that the Fed cannot see, is the phenomena of shrinkflation. Companies shrinking the packages of their goods but charging the same. And guess what? The zombie consumer, fueled with stimmies, will pay even more for a smaller package. Or you're going to shrink the package, I think you deserve to be paid a little more. This is the state of the zombie consumer that is roaming around the economy these days. And Wall Street, the corporates, are milking this mania for all of its worth. The Fed ushered the tsunami of liquidity, pushing our stock valuations to insane levels, allowing corporate executives to dump stock and get filthy rich in an instant, also allowing corporations to issue shares buybacks, which is a fancy name for stock manipulation. When you use the fake cash injected by the Fed, aka the cocaine, you use some coke to prop up your stock price, and then you as an executive get to dump at a higher price, getting richer in the process and leaving the retail dummies and regular investors holding the bag when the music stops. Passing the increase of input costs all the way down to the end consumer is another strategy to milk the mania. And here's another one. Shrinkflation. They know the zombie consumer will pay no problem at all. So why give them more? Shrink the package and charge them the same, if not even more. Look around you, not just in your pants. Shrinkflation is everywhere. And perhaps gents are more used to shrinkflation than the ladies. You know, in a cold day when things don't work as they're supposed to. Or more commonly, when you get excited in the wrong head and you get nervous, she already agreed to come back to your place. But the plumbing is not working. You see what I'm saying, gents? What do you do now? Because you're about to create some embarrassing memories. You don't want to do that. So here's what you do. You channel your inner Jerome Powell and you play some mental gymnastics. You know what, dear? We don't have to do anything you're not comfortable of doing right now. I can wait. So how about we chill and we order some Taco Bell and just enjoy the night? Here's the problem. Even Taco Bell in this cocaine-fueled economy is facing shortages. How could you ever run out of cat meat? But it is happening anyways. And when we talk about Taco Bell, we have to talk about toilet paper. And even the prices of toilet paper are rising significantly higher due to shortages. Just when you thought you were in the clear to stock up on toilet paper again, wood pulp, the primary raw material used to make it, is getting more expensive. And I know what you're gonna say. You know what? I listen to this show every day, and I hear nothing but FUD. FUD here, FUD there, and now I'm scared. There are a lot of sources of fear here, so I'm gonna forego toilet paper altogether. I'm gonna stick to diapers from now on. I got bad news for you too. Consumers are continuing to pay more for diapers after the February storm in Texas disrupted the supply chain. And I know what you're gonna say, but I'm 80 years old. It's not gonna be my problem anymore. Hold your horses. Have you gone casket shopping as of late? You know, you go on a date with a lady to do some casket shopping. Have you noticed the prices? Because coffin cost increase could hit customers. Ta-da! Even dying will cost you an arm and a leg. In this hyper-bubble, hyperinflation, cocaine-fueled economy and market. I was thinking about dying, but now I gotta change some plans. Because it's, too expensive to die. Hey God, can you do me a favor and hold on your plans of burning my ass? You're gonna get your wish someday, but not right now. It's too expensive to die. Come on. Wait a little more until the inflation becomes transitory, and then I'm ready for you. But you know what? You should be thankful you have only one life to live, because one life equals one casket, one coffin. Can you imagine if you had 9 lives? Say if you're a cat, for example. Now you gotta pay for 9 coffins. Speaking of cats, even cats cannot escape this inflation. Pet food shortages leave owners on the hunt for kibble and cat treats. And look at the cat. She's like, what the are you people doing to this planet? All of these shortages. Now you gotta hit my kibble too? And of course, a lot of this is due to the increase of shipping costs. Matter of fact, shipping costs are surging to extremes. Surge in shipping costs globally could cause price hikes from coffee to toys. It's already happening. Price inflation is about to hit toys just in time for the holidays. So when your kids don't get the toy they want in Christmas, tell them to thank Papa Jerome for the gift of inflation. It's not transitory, pal, when my little girl is crying. And when I say my little girl, I mean my little dog, because that's the only girl I have. But her kibble is also facing a shortage. Thank you to the reckless monetary policy by the drug dealer, Jerome Powell. 229% surge in China-US shipping costs drive inflation pressure. But hey, where is inflation? I don't see inflation. Is it here? Is it over there? Even if it's here, it's going to be transitory. Trust us. Disclaimer, prices are not going to go down. And you know what's the worst part of this inflation? Here it is. The increase in commodity prices. We have a super cycle in commodities. And yes, certain commodities prices went down, the likes of lumber, but all in all, commodities prices continue to linger at elevated levels, burdening producers and consumers alike. Inflation comes for aluminum as the everywhere metal surges. Matter of fact, the projections for aluminum supply and demand dynamic, the aluminum shortage is expected to be here with us all the way to 2026. Now, the genius investors these days, the retail investors, the SPAC generation of investors in particular, they're chasing meme stocks or technology stocks. Cathy Wood, bro, Cathy Wood, the future. You know what the future is? Alcoa. Look at the chart of Alcoa's stock, surging significantly higher. And this is just the beginning, baby. Pick the inflationary stocks, because the Fed says inflation will be transitory. but prices are not gonna go down. What does that mean? And I'm whispering in your ear right now, corporate margins for these companies who are able to pass the extra cost to us consumers will benefit tremendously, aka their stocks will go much higher. Bosses at major industrial companies, including 3M and GE, see inflation for raw materials and logistics persisting through the end of the year. Ta-da! But perhaps there is a darker side of the inflation in commodities prices, a sinister side. Thank you once again to Papa Jerome and the Federal Reserve. Here's who wins and who loses from the surge in commodity prices. The countries in blue, these are the countries that benefit from inflation. Countries in orange, I guess, are the countries that suffer from higher inflation. And therefore, yours truly, the guy you're listening to right now, has been investing in these markets. The Russian market, the Saudi market, the Brazilian market, the South African market, even investing in Canadian miners. Because inflation will be good for these economies. Inflation will be bad for, you guessed it, the poorest countries in the world. They say Yemen, Sudan, and Lebanon are the most at risk. Let me refresh your memory. Back in 2011, when food prices soared, commodity prices surged significantly higher. What happened back then? The Arab Spring, chaos across the world, revolutions, bloodshed all over the place. And what's going on right now in Lebanon, for example? It's a failed state. It's a collapsing state as we talk right now. This is from the New York Times. Collapse inside Lebanon's worst economic meltdown in more than a century. When you read the story, you realize that people in Lebanon are lining up for hours and hours and hours to fill up for gas, and bread prices increase by the day. They double in the morning. We're seeing a shortage of electricity. The country is in dire condition, and this inflation in commodity prices is adding more fuel to the fire and more pain. And more pain means more grievances. More grievances mean chaos, revolutions, and possibly wars. And once again, here are the the countries that will benefit from the increase in the commodity boom. And you guessed it, it is countries that produce oil and gas, assuming that energy prices continue to hold. You have Delta in the mix, and Delta is the Fed's best ally. Delta could tamper inflation expectations and push the brakes in this commodities boom. But for now, you look at countries like the UAE, for example, Qatar, Saudi Arabia, Ukraine, Russia, Norway, Chile, Brazil, all of these countries will benefit from the commodities super cycle. Countries that will get hit: Bangladesh, Vietnam, Thailand, Pakistan, Philippines, Egypt, South Korea, and the list goes on and on. So assuming that inflation continues and prices don't go down, these are perhaps the economies you want to look at to invest in, the ones you should invest in and the ones you should avoid. But once again, there is a sinister and a darker side to this inflation, specifically when we talk about food security. We talked about shelter security with the eviction moratorium. They're kicking the can down the road, and the reason is the moment the eviction moratorium ends in this country, we will see the biggest homelessness crisis in history, and therefore they have no choice but to continue to kick the can down the road. And in addition to shelter security being a scarcity, food security is becoming a scarcity too. We're seeing hunger and starvation rising globally, even within rich countries, by the way. Global food prices post the biggest jump in a decade. Oh, and by the way, in addition to the reckless monetary policy fueling the global economy with cocaine, causing commodities prices to surge higher, leading to economic disruptions and starvation. In addition to that, we have weird phenomenons, unique conditions, the likes of the pandemic and climate change, for example, adding more fuel to the fire. It's not just the reckless monetary policy. It is the dynamics of the pandemic and the climate crisis coming all together to create the perfect inflation storm. I have never seen drought like this. Minnesota farmers struggle amid dry conditions. And we have another one, a heat dome that's about to hit the United States. It's actually hitting the United States as we speak right now. The Pacific Northwest is seeing historic, record-breaking highs. Extreme heat waves in the Pacific Northwest as we speak right now. And extreme heat is not just in the United States, by the way. It's across the globe. But this drought, stretching from the western United States all the way to the Corn Belt, the agricultural heartland in the USA, this biblical drought is causing crop shortages all over the place. Farmers cannot grow crops anymore. There is no water. And now we're seeing a hay shortage across the country. What does that mean? Again, there are ripple effects. What do you think cows eat? They eat hay. If there is a shortage of hay, then there is less food for cows. And here's the result. As drought cuts hay crop, cattle ranchers face culling herds. That's a fancy way to say killing herds. And of course, some of you raised the point that perhaps culling herds will increase the supply of meat in the market. The problem is that meat will go to waste because it has to meet certain standards, certain government regulations before it is able to be sold in the market. Remember, last year we saw the images and videos of farmers wasting tons and tons of lettuce, potatoes going to waste. And the reason is restaurants are not buying them. We have a hunger crisis in America. And the question was back then, why not use all of this lettuce, potatoes, and other crops to feed the hungry? The answer is government regulations. So here comes the meat shortage. Now, know what you're going to say. You're going to say, number one, with all of this heat, I'm going to take a dip in my pool. Wrong. Here's the problem. The national chlorine shortage is raising costs, forcing season closures for money-losing public pools. But good luck hoarding some chlorine these days. Number two, I know what you're going to say. Forget beef. I'm going to stick to chicken and seafood. Here's the problem. Tyson Foods grappling with unprecedented inflation. Every single one of you right now should bookmark the conference call from Tyson and listen to what they're saying. Tyson CEO said inflation was up 14%. 14% during the company's third quarter. Powell says inflation at 2%. The CPI says inflation at 5%. Tyson says 14%. And it's not just Tyson, by the way. Costco disagrees with the Federal Reserve on the future of inflation. We just wrapped up the earnings season. Every single company, almost every single company in their earnings call mentioned inflation as a problem, whether it is materials shortages or labor shortages. Every single company talked about inflation and the impact it will have on their business. But most importantly, are you going to pass the extra cost all the way to the end customer? And most companies said that they have no other choice. They have to pass the extra cost to the end customer. Now, certain businesses have the luxury of doing so. These are consumer goods companies like Procter & Gamble, for example. But there are other companies that are not able to pass the extra cost to the end customer. And therefore, these companies and the stocks of these companies will suffer tremendously. Here's your seafood, by the way. Remember the teach a man how to fish, all that crap? Well, good luck finding somebody to teach how to fish. Nobody wants to fish. Shortage of labor. Restaurants pull seafood from menus. High prices amid inflation. Seafood is becoming a luxury. And the reason is there is a labor shortage. And of course, thank you to the Fed for creating this environment to begin with. While the environment has been good for public companies, Wall Street and the likes, it has been extremely challenging for U.S. small businesses. Matter of fact, this week we got the Small Business Optimism Index, and it went down significantly. And the reason is small businesses across the country are struggling and suffering with this inflation, specifically when it comes to the labor shortage. They're finding a hard time to find workers at all. And the only way out from the labor shortage is to offer more incentives, higher wages, and of course, small businesses have restrictions. They don't have the sugar daddy at the Federal Reserve giving them free cash. Small businesses, believe it or not, actually have to be profitable to grow. And like public companies in the stock market casino, they can operate on losses for years and years and years. Hint Amazon. Meanwhile, the stock of that company continues to grow higher and higher and higher. And the company gets to expand on the value of its equity. Two Americas, rich versus the poor and the middle class. Big business versus small business. Two different Americas. And by the way, the labor shortage is all over the place. All the way from cops down to McDonald's workers. Austin police shortage at quote-unquote crisis level. 911 callers forced to wait. 911, what's your emergency? I'm hiding in a closet. Somebody with a mask and a knife trying to kill me. Please hurry. Send somebody here. Sir, we have a shortage of police, so hold on tight and good luck. Oh, by the way, you don't want to scream. That makes them a little more angry. The stabs, they get more aggressive. So good luck. What about McDonald's? McDonald's franchisees blame hiring challenges on unemployment benefits and warn that an inflationary time bomb will force them to hike Big Mac prices. That's it, folks. That's it. Powell must taper now. Powell must raise interest rates right now before our Big Mac prices go higher. That's the limit. That's the red line. Once Big Mac prices go higher, the show must come to an end. And by the way, McDonald's talk about unemployment benefits. That's the reason why we're having a labor shortage. That extra $300 that you bums are collecting on weekly basis from the government? Oh, that's the reason for the labor shortage. And I told you in this channel many times before, the so-called enhanced unemployment benefits, aka the $300 you get per week being unemployed, that is not the reason behind the labor shortage. It might be a reason at the very low end of employment, but there are many other reasons for the labor shortage. And you will see in September when the unemployment benefits expire, assuming they let them expire, by the way. That's another loop. God forbid we cut people off from free cash from the government and we lose some votes. You got to continue to grease them up. But assuming, hypothetically speaking, that they let the unemployment benefits expire in September, you will see that businesses will continue to struggle with labor shortage. When potential employees are asked, why did you reject an offer, a job offer, in the past 6 months? 36% say the salary was too low. 35% say they're concerned about COVID. 31% say need to care for my family. What does that mean? It means there are a lot more reasons, many more reasons, for the labor shortage beside the $300 that the bums are getting per week. The salaries are garbage. The work environment is garbage. We're overworked, underpaid, and we had it. We're seeing videos on TikTok with kids quitting and Burger King and McDonald's. They're done. They're watching other kids making an insane amount of money, trading stocks on Robinhood, making cute videos on TikTok, and selling pictures of their feet on OnlyFans, making thousands and thousands of dollars. People are concerned about COVID. Now we have Delta. What's next? Who's next? A lot of moms left the workforce to care for family and kids at home. In addition, a lot of workers just had it. They're done. Wages are garbage and not keeping with inflation at all. And now some 22.3 million Americans recently received counseling or therapy from mental health professionals, an increase of more than 5 million compared with last year. Workers in general lost it. They're done with this garbage. They're done with corporate slavery. And now we're seeing a record number of Americans quitting their jobs, leaving altogether. We're done with this insane housing bubble, inflation all over the place. You find a van, that becomes your home, and you live the nomad life. Take a break. Work on your mental health. We're not talking about Simone Biles here. We're talking about people getting paid $50,000 a year, if you're lucky. Folks, inflation is rising all over the place. And even as your wages increase, they're struggling to keep with the actual pace of inflation, not the CPI pace of inflation, the actual real pace of inflation, the increase in prices that Powell dismisses as, yeah, that's going to rise higher, but who cares? Key inflation indicator jumps 3.5%, the fastest rise in 30 years. 30 years. Yet we have some geniuses over at CNBC, the Fed's apologists, even certain YouTube personalities spreading propaganda that, the risk is for deflation. There is no inflation. Once again, the fastest rise in 30 years. You better pray, as long as you can, that Delta will indeed be a massive problem and slow down the economy, to slow down the pace of inflation. That's your only hope, Delta. This is yet another piece of news, a disturbing piece of news that we got this week. U.S. home prices rose the most on record in Q2, with the median price of existing single-family homes jumping 23% year over year. About 94% of the 183 metropolitan areas measured had double-digit gains, up from 89% in Q1. Wow. Barron says, Disco Inferno, the U.S. could be headed back to the 70s style stagflation, only this time around with the worst taste of music. And even the IMF is now sounding the alarm. IMF warns that inflation could prove to be persistent, and central banks may need to act. Oh, you think? What is the point of all of this, by the way? What is the end game for the Fed and other central banks across the world from this reckless monetary policy? What is the end goal here? Perhaps the end goal from the get-go was to make the rich richer. Why is this so hard for you people to understand? The Fed says our mandate is full employment and inflation. Price stability, my ass. The real mandate of the Federal Reserve is to prop up, protect, preserve, and inflate the assets of the wealthy, stocks and real estate. How the Fed's fine intentions feed wealth inequality. Fine intentions or true intentions. U.S. wealth grew by $19 trillion during the pandemic, but mostly for the very rich. Surprise, surprise. Oh, and the rich people are having struggles too with this inflation and fake money. Rich people of the Hamptons have a new headache. Even richer people, oh the agony. Perhaps we should use some U.S. taxpayer money to build another Hamptons for the rich. One playground is too small. And here it is, folks. Wall Street doubles down on lending cheap money to the rich. Ta-da! This is the end goal and the result, by the way, of this reckless monetary policy. The money, trillions and trillions of dollars, printed out of thin air, magically find its way in the pockets of the wealthy. Combined value of loans made by wealth management units at top U.S. banks in second quarter exceeds $600 billion. And the rich, of course, using the fake money to play in the casino, you know, the game, gambling in stocks and options, creating insane pumps and dumps all over the place. Look no further than the Archegos disaster. The man is a criminal and was blacklisted from every bank in the United States. But somehow, because banks have a problem these days, too much money, and they have to lend it anyways. You think they're going to lend it to you and I? You think they're going to lend it to small businesses? Struggling small businesses? Of course not. They're going to lend it to their buddies, the rich. And Bill Wong of Archegos Capital managed to secure billions and billions and billions of dollars. And he used those billions to manipulate the stock market, pushing stocks like Viacom, for example, to cartoonish levels, pumps and dumps, leaving mom and pop investors as the victims, while these rich wipe the slate clean, they pay a fine here and there, and they're out on their way enjoying freedom. And here comes the propagandists. Watch out here, by the way. Watch out for the talk about inflation. You're going to get banned. You're going to get canceled. You're going to get gagged if you talk about inflation. What inflation? What are you questioning the agenda out of our deal leaders? How dare you? Here is a famous propagandist, a classic one. His name is Paul Krugman, and he says in the New York Times, "Don't let inflation and anxiety undermine our future. Come on, a little inflation is good." Why is this propagandist even saying this? Here's the reason. Everything has become political these days, including inflation. They did it with vaccines. God forbid you question the holy vaccines. God forbid you ask the propaganda minister, why don't you just release the breakthrough cases in the White House? Propaganda minister says, why do you need that information?
Impact of individuals who may have, as you said, breakthrough cases.
Why not just provide the number? Are you trying to hide something?
No, but why do you need to have that information?
In case of transparency, the interest of the public, going
And now the BlackRock administration is under a lot of pressure because nearly 80% of Americans, 80%, blame the BlackRock administration for inflation surge, according to a poll. 80% of Americans are going to blame Biden for this inflation. Now, you and I are smart enough to understand this. Inflation has always been a monetary phenomenon. It is happening due to the actions out of the Federal Reserve, not the federal government. Of course, the reckless spending out of the fiscal side is also adding fuel to the fire, but the origin, the source, is the monetary policy. Whether it is the BlackRock administration or its predecessor, the Goldman Sachs administration, inflation would have risen higher regardless of which administration is in power, because the source of inflation is always the monetary policy, aka the Fed. And finally, does the chairman of the Fed even recognize that his policies are creating the largest wealth inequality gap in history? Of course not.
According to federal statistics, the upper half of the American people take home 90% of income, leaving about 10% for the lower half of Americans. Where are we headed in this country in terms of income disparity?
The Fed doesn't have direct responsibility for these issues.
I hope you enjoyed your daily dose of FUD, as the imbeciles say, otherwise known as your daily dose of reality and sobering truth. But some can't handle the truth, as Colonel Nathan Jessup said. We are accustomed to the happy Hollywood ending, that at the end everything will be alright, that a hero will pop out of a comic book to save the day. But what if the hero fucks up? What if the hero already fucked up? What if I told you that 70 years from now, when we're all dead and gone, they will look back at this period as the moment that changed history forever? As the greatest experiment in financial history implodes before our eyes. It has indeed succeeded in creating the largest wealth inequality gap in history. It succeeded in creating the greatest concentration of wealth in history in the hands of a very selected few. But it has failed to create anything tangible or sustainable, and left most far behind to face a grim reality of a dire economic future and a fading glimmer of hope and opportunity. As the reckless monetary policy collides with once-in-a-lifetime pandemic and a disturbing weather phenomena, leading to a perfect storm of inflation and shortages. Food and shelter security is becoming increasingly difficult for those left behind, creating grievances that will lead to political chaos, disrupting the world order and replacing it with a new one. We are indeed living in a unique moment in history that will shape the rest of our lives and hand the next generation darker times. This has been your daily dose of reality.